This is the Real Estate Investing Abundance Podcast. I'm your host, Dr. Allen. I know you're excited to get into today's show, but I have a very exciting announcement to share with you before moving to the show. We've just launched a complimentary and comprehensive webinar that, among other things, shows you how to legally use passive real estate investing to reduce your taxes, recession-proof your nest egg, and take the sting out of inflation. If you are curious to learn more, go to stevetucker.com/webinar. It is complimentary and only takes a couple of minutes of your time. Once again, that is stevetucker.com/webinar. I'll see you in the webinar. Enjoy today's show. Hello, enlightened investors, and welcome back to Real Estate Investing Abundance. I'm your host, Dr. Allen. Today, we're going to take a deep dive into know, like, and trust, vetting the real estate investment company before investing, a critical step for all of us. With us today is Kenneth Gee, and he is the founder and managing partner of KRI Partners. He has more than 24 years of significant real estate banking, private equity, transaction, and principal investing experience. Throughout his career, he has been involved in transactions valued at more than $2 billion, much of which has included the acquisition, management, and financing of various multifamily real estate projects. So Ken, welcome, and take us into the show and share a memorable experience that was key to who you are today.
Yeah, sure. So first of all, thanks for having me on the show. I'm thrilled to be back, actually. Super excited for that. Memorable experience, I would say, probably a lot of parents would say this, but the birth of my children was probably the most memorable experience. And the reason it was, for obvious reasons, right? You have a child, it's a pretty cool experience. But what is really memorable about it is it really reshapes you, your life, the way you are, what you think about, because, I think about pre-kids, I was a completely different person. My focus was on what was I going to do this weekend? What were we going to do tonight? Now after kids, and now my kids are grown, but then it was more about, okay, what can we do with our kids today? It was really, really reshaping your focus. And it's really interesting now that I've gone through the process, how life goes from all about you to completely about somebody else. And it's a really cool transformation when you now go through it and look back at it. It's pretty interesting.
Yeah, it is. And it's interesting that was one of your most memorable experiences. And I wished all parents were that conscientious. It would be a much better world. So, well, Ken, what are 3 things a real estate investment company must have before an investor considers giving them their capital?
Yeah, that's you're hitting on a topic here that's really, really passionate for me, and I could probably even expand that into the 4 rules that I want everybody to follow. But let's stick with 3 first. You want to have an investment firm that has investor-friendly terms. That's really important, right? And I'll weave that into my rules here in a minute that I've kind of come up with over time. Secondly, you want them to have a track record. They have to have a track record. That's really important. And finally, third is experience. So what I've actually done is thought about that whole concept, and I actually came up with 4 rules that might be interesting to your audience. That this thing that we do, this private money world, is fairly new, and it's kind of in its infancy, and there's not a lot of regulation around it. So there is some, but it really leaves investors to kind of figure out for themselves who should they invest with. So if you follow my 4 rules, I feel like it's going to go a long way to keep you out of trouble. So like I said, experience. You want that firm to have experience. That's really important, I think, for obvious reasons, but the least of which is we just don't know what's coming next. We didn't know there was a pandemic coming. We didn't know inflation was coming. So many things are around the corner that we don't even know. So you want that management team who's running your deal to have some experience. You also want them to have a long track record. I mentioned that. And more importantly, you want them to have a track record where they've actually gone full cycle on deals. So they've actually completed the job. They got the job done. They've done well. And it's kind of similar business model to what they're talking about for their current projects, right? So you know that they've been there, done that, and they've done it a few times and done it successfully. Put the investors first. That's the third rule. And I like that rule because, it makes you take a look at the terms of whatever investment you're looking at. And just ask yourself a question. Is it possible for the sponsor to do really well and the investor not do well? If the answer to that is yes, you should really revisit that, because it's that there's a potential there that you don't have good alignment with the sponsor and the investors. And I think that's really important. And then finally, my fourth rule that really has proven to be an important one, and that is transparency. You want your investment firm that you're with to have some transparency, right? You know, in our world, we send out quarterly statements, includes P&L, balance sheet, rent roll. We go through a whole explanation about what's happening on the property. We do a monthly webinar. I call it the Real Deal webinar, right? It's a look into what's really happening on the ground at our properties. So this level of transparency. And if you're in one of our deals and you want to go stop by the property and visit it, I'm totally cool with that. We just let us know when you're coming. So we make sure that we have somebody there to tour you around. And it's that level of transparency. So I feel like when I see these things not work out well for an investor, I kind of apply those four rules and say, okay, which one did they break, right? They didn't do it intentionally, but which one did they not necessarily follow? And usually there's at least one or two of those rules that get broken. And that's kind of how I came up with it, because I do want every single investor to be successful, whether you invest with us or you or anyone else. We need them to be successful, because that's why we're all here, right?
Exactly. I mean, it's a fruitless endeavor unless the investors are benefiting as well. And I mean, I would take that even further. I think a really conscientious firm is going to ensure that their tenants are benefiting from it as well. I think it's a whole entire process there. But Ken, let's go back to your investor first. And could you give us some examples of potential deals, or perhaps deals you have seen where, in fact, the investor was not put first? And how was that shaped, and how did that look?
Yeah, so usually the most obvious one, when you take a look at someone's offering documents, you might see pretty excessive fees, right? You might see a commitment fee or an acquisition or disposition fee in the 3%, 4%, 5% range. I mean, those are pretty hefty fees that, you know, if you're doing a $10 million deal, I mean, that's a lot of money, an enormous amount of money that kind of comes right off the top, and it comes off the back end too, if they're doing both sides. So I would say the biggest example that I see most commonly is the fee thing. That's really, really important. The other thing, and this is a little more egregious, and you got to watch for this. This one's harder to spot in the documents, but sometimes, and it's rare that you see this, but you do see it. Sometimes you'll invest in a deal, and the business plan is to refinance you out, right? Return all your capital, and then you're actually out of the deal. Well, that's kind of struggle with that a little bit, right? Because you put all the money at risk, just like an owner. You were an owner, and suddenly you're not an owner, right? That doesn't seem fair. So, you know, pay attention to that. I prefer deals where investors, if you're refinancing everybody's money out, they're still in for whatever percentage they had before. They took the risk right along with you, and I kind of feel strongly that if you get all your money back, they should get all their money back, and we should all stay in the deal together, because we all took the risk together. And I feel like that, not giving them that upside, right, just doesn't seem fair to me. So I don't know. Those are a couple of examples of things that I've seen. I'm sure there's more, but you know, those are probably the two. Well, the first one's the most obvious and the most common. The other one just seems really brutal to me, and I just want to bring it to people's attention so that if they're reading it and they're thinking, is this what's happening to me? It might actually be what's happening to you. So pay attention to that.
And yeah, it is probably going to be in those documents. And, you know, it's one thing to have a choice there if you want out at the refi. It's another thing to see in the document that you are going to be out.
Right. Then you're just a lender. Then you're really just a lender. And that's okay if you're cool with that. If that's your intent and that's, you understand that going in, there's nothing wrong with it. You just want to really understand it. And that one, I think, can catch people by surprise sometimes, because they just never think that would happen.
Yeah. Most of the time, we're just not thinking that far ahead. And I think probably most of us are just kind of under the assumption that that's not going to happen.
Right.
So it is. So thanks for pointing that out and being sure that in the future we look into that, because it is an important consideration. Well, you say that real estate is not a passive activity, and I totally and completely agree with you, but investing is. What do you mean by that?
Yeah. So what I hear people say all the time is they buy a single, a double, 3 units, 4 units, and they're getting some net cash flow from that investment every month, right? You see what I just did? I called it an investment. And yes, it is an investment, but the only reason you're earning that money is because you're probably the one working at the property doing the work. So that really is kind of passive investing in disguise, right? You're really, that's earned income. I mean, it just is because you're working there. You whatever it is that you're doing now. And even if you're making managerial decisions, things like that, I mean, that still is work, right? So that's really not totally passive. Now compare that to, let's say, Alan, you had a deal, you're the sponsor, you're running the deal, you made the deal, you got it under contract, you're making all the decisions, you're doing all the work, and I've invested in that, and I just open my mailbox or look at my bank account and I see the distribution. That's passive. That's what passive investing is. And I see those lines getting blurred a lot, especially with the smaller properties, and especially when people are new in that business, because they know the real estate's a big deal. They know they can make a ton of money. They just say, okay, I'm going to dive in and be a single or double or triple. And what they don't realize is that, well, a lot of times this happens, they kind of get blindsided because they sell their family on the concept that it's a passive investment until they say, hey, honey, I'm going to go to the property this weekend and I'll be there all day Saturday turning a unit, and all of a sudden wait a minute, what do you mean this is not passive? You're gone all day, right? And it starts to impact your life. So I will tell you that there are a lot of firms like yours, like ours, that are able to produce pretty darn good returns for doing literally nothing. And so that's why I like people to make that differentiation, because they always think buying a duplex is going to be a passive investment, and it's not the way it is.
And I mean, there's a lot of shows on HGTV that give the impression that real estate is a passive experience. And so it's not surprising to me that a lot of people get caught up in that. In fact, so many people I talk to who are now multifamily investors started out with single properties and either doing fix and flips or fixing and holding, with the idea that it would be a passive experience. And after a number of units, they began to realize this just wasn't what I got into this for. And so many of them have become actual passive investors, and they are investing in real estate firms that are doing the active part of it so they can be passive.
Yeah, it's probably actually a good thing, because then they have a real true appreciation for what that firm is actually doing for them. So, it's probably not a bad way to experience the process. It's just, it's important to me that people have that differentiation.
And I think it's also important to realize, I mean, a lot of people that go into that process and they buy 1 or 2 complexes and they go, my gosh, this isn't for me. And they just get out of it altogether. And I think they need to realize that what they've learned from that is a good experience, but they can put that to work to really become very knowledgeable passive investors.
Agreed.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. So what are the 5 important steps that we must follow when renovating multifamily apartment properties?
Yeah, Alan, that's a great question. So, and my answer is going to surprise you. And because 3 of these 5 steps really have nothing to do with the actual renovation. So the first thing I want people to do is make sure they do a true in-depth market study. This is really important. So you need to understand how your property competes in its current market set, right? Pretend like you're a real renter. You're driving around the neighborhood. You're looking for a place to live. And what that renter is doing in their mind as they're visiting properties and getting pricing is they're stacking these properties against each other and saying, okay, this one's nicer, it should be more. This one's not so nice, it should be less. Well, you need to do that with the way the property sits. But here's the critical part in a renovation. You need to look one market competitive set above that property where it is today. You need to look at where you're going to take it tomorrow. And the reason that's important is because we're in this game to make money, right? Everybody is. And so you want to understand how much rent is reasonable to expect if you did certain things to the property. And so now you're going to pretend like you're that renter, that prospective renter, and you're going to look at, okay, let's pretend like I'm looking at this next tier up in terms of quality of properties. And I need to make sure I understand where I'm going to fall in that competitive set, because then that helps me understand how much rent upside I really genuinely have, because that is going to allow you to manage your renovation budget and everything else. So that in-depth market study is, first of all, extremely important. Then step two is determining your budget. You're going to use that information to determine your budget and figure out, what's the plan? What are we going to do? What should we do? What should we not do? Because what you don't want to do, and a lot of people do this, and they don't do it intentionally, but oftentimes they'll over improve. You don't need to do that much to get what you need to get. That's really important. Now, let's say you bought the property, and this is the part that makes everybody nuts. I want you to sit on your hands for 30 days, 60 days. The time frame isn't as important as the fact that you're going to sit on your hands for a minute, and maybe there's something obvious like the roofs are leaking, like I said. Well, you got to do that. You don't have to wait for that. But what you want to do is you want to really now get to know the property with your ownership. Right now, you're hearing what the tenants really have a problem with, what their complaints really are, and what needs to be done at the property that you didn't discover before. Because there's no way you're going to buy a property, take it over, and not learn something new. And I put this step into my plan because many, many, many years ago, I went in full speed ahead. Let's go, let's get it done. I spent all my money, and then I learned something that I needed to do. And oh man, I wish I would have just patiently waited a minute. I would have learned that. I could have then reallocated my improvement budget to take care of whatever that issue was. I don't remember the issue now because it was so long ago, but I lost that ability. Of course, we just reached into our own pocket and funded whatever it was that we had to do, but it would have been a lot less stressful if I would have just sat for a minute, figured out what's really going on, and then say, okay, is my budget still good? Is my plan still good? Should I make any changes to it? So that's step three. When you renovate, I see a lot of people do this. There's people that would advocate for doing inside first, do inside the units, then do outside. We are exactly the opposite. And the reason I do that, we do outside in. So I love to literally walk the property, starting at the street. What do they see? Pay attention to what they see on the way in. So you're just controlling that experience all the way into the property, including the amenity section. I love to make amenities sections really nice. I love to add outdoor TVs and sitting areas and all the outdoor grilling stations. People just love that stuff, right? And I'm not talking about charcoal grilling stations. I'm talking about propane, natural gas grilling stations that are really nice, that are really cool. And I do that because it's important that you emotionally grab that prospective renter on the way in. If instead that experience on the way in isn't really pleasant, many times people won't even get out of their cars. And your leasing agent says, hey, you know what? I have all these tours, but nobody's showing up. Well, they did show up. They just didn't get out of their car, right? Because they were turned off by the outside. So in my world, we make the outside nice. We make that experience because now I can get them to the front door of that unit where I just need to not let them down, right? The improvements you do in the unit have to be acceptable and make sense with everything else that you're doing at the property, but you don't have to over improve the unit. So again, I go back to, if you flip that around and do inside the unit first, I can't get them to the front door. And all this incredible stuff you did is behind that locked door, and I can't get the person to the front door to even see it and show it off. That's why that plan tends to not work well. And I know why people do it. They're like, look, you live inside your apartment. People want the inside to be nice. And I get that argument, but I'm just telling you what happens in the real world. If I can't get a prospect to the front door, it doesn't matter. I could spend $10 million inside that unit. It doesn't matter because they never get to see it. So use that outside in approach. And then finally, don't be afraid to reassess your plan periodically. As you go through the process, you're going to continue to learn. You're going to continue to have new ideas. I see so many times, especially new syndicators, new people in this business, they said, wait, I told our investors we were going to do X, Y, and Z, and we were going to paint it this color. And I can't change that because then my investors will think that I misled them. Well, I'm here to tell you that your investors, when they give you their money, they expect you to be able to pivot when necessary. They're expecting you to really be good stewards of their money. And if that means, yeah, we were going to do this, but we found out that doesn't make sense, I'm not going to do it anyway. Let's scrap that idea and do something else instead. You want to have the confidence to be flexible with your plan, because to not do that usually ends up having you spend money on things you just shouldn't have never spent money on, right? If you go in thinking, I don't know, roofs. Let's say you thought the roofs were horrible, and then you get in, you realize there's nothing wrong with the roofs. They just need a little maintenance. Well, it would be silly to then go spend all that money to do new roofs anyway, because you told someone you were going to. So those are the 5 rules, or my steps that I like to follow when we renovate. We do a ton of renovation, but I feel like if you follow that process, you'll kind of stay in a good place.
Yeah, I like those 5 suggestions. I think you're probably the first person I've talked to who says, sit on your hands and get to know the property, because time is money and everybody goes into it with a business plan, and the expectation is they're going to get right onto that business plan. So that's interesting to me. So you have implemented this sit on your hands and get to know the property. And I assume you continue to do that because in the long run, it has been beneficial and it pays off on the bottom line in the long run.
It certainly has. It stops you from making mistakes or spending money on things that you shouldn't have spent money on. Now, remember, Alan, I'm not suggesting you sit on your hands for a year and a half. That I'm not talking about it. We're talking about 30 days, 45 days, 60 days, not a lot of money. And I'm telling you, you learn so much when you take over a property, because that only then what happens is when you buy a property, so when you're going through the process, the owner, they're trying to limit your access, and, they don't introduce you to the worst resident they have and things like that. But when you do take over, you start learning. You start learning, oh my gosh, there's plumbing leaks everywhere. You learn so many things that you just didn't know. And you just want to have the ability to adjust. If you go full speed and spend all your money and then you learn these things, and now how are you going to deal with them? Yeah, I mean, you can't. Syndicators don't go back to their partners for money. That is not how it works. You can do that, but they won't be very happy with you. And I just want you to stay out of that position. So,
well, that makes,
we do it every single deal. We do it every single deal we do.
Yeah, it makes perfect sense there. And I mean, it's not just really sitting on your hands. It's actually intentionally patience with intentionality and a very active process. You just are holding off on implementation of that business plan.
Yeah, and again, I go back to, if the roofs are obviously bad, get going on the roofs. I'm not suggesting you defer things that you shouldn't, but just be deliberate. And I like the way you said that. Be deliberate about your decisions, and just make sure. Just constantly ask yourself, is this still the right thing to do? And don't be afraid to challenge yourself.
Well, Ken, you have a lot to offer private investors and passive investors. So tell us about your company, who you are, how we can get in touch with you to invest with you.
Sure. So the company name is KRI Partners, as you said early on. It's my firm. I started it 25 plus years ago. First 10 years, we grew up in Cleveland. Now we don't do anything in Cleveland, except our back office happens to still be there. But everything we do is in growth states. We're primarily right now in Florida, all throughout Florida. So we do just like a lot of folks do in this business. So, we have a great deal of experience. We've done 18 deals, most of them full cycle with, extraordinary results. If you want to see our track record that we did have vetted by Veravest, by the way. So we had an outside firm come in and vet our track record to make sure that, we weren't misleading anyone. Go to kripartners.com/invest. So kripartners.com/invest. That'll take you to our page where you're gonna hear more from me about what we do and how we do it and why we do it. Our track record's right there for you to see, all the documents that you need to see. And at the bottom of the page, we actually added it's called the Jacksonville turnaround story, but it is a 20-minute in-depth look at a deal that we did in Jacksonville, before and after. What did it look like? Why did we buy it? What did we do? Why did we do what we did? And you can see the whole transformation of the property and the results. So a lot of people, I think, enjoy watching that. So again, kripartners.com/invest takes you right there.
And all of that information is in our show notes. And like Ken had said earlier, he has been on the show once before, almost 2 years ago. You can go to episode 59 and learn more about Ken, or just go to our podcast website and search for Ken Gee. Let's jump into our last questions. Ken, our meaning of life questions. So what is one difficult challenge or setback that you faced in life, and how did you come through that? And what did you learn from that?
Yeah, so we'll stick to professional. I mean, I've had plenty of setbacks in my life, but on the professional side, probably 0809 was a tough one. I went through the financial recession. I'm thrilled to tell you that we didn't lose a penny of investor money. Everything came through fine, but that was a pretty significant setback and a massive learning experience for us, because credit was nearly impossible to find. It was not a very friendly environment at any level. And it really, what I took away from that was just, I always tell people, you really figure out who you are when your back is up against the wall. And that was we almost had our financial system collapse there. People really studied that event. It was pretty brutal. And so to come through that, learn as much as I can about debt management and interest rate management, and just really how to batten down the hatches and cut costs to get through those things. That was a very impactful period. And it wasn't just a 5-minute ordeal either. It lasted for a couple of years. So that would be my answer.
Yeah. It was a brutal time for many of us, certainly brutal for me. All of my investors, we were able to maintain their capital and return their returns as projected, even though I wasn't so fortunate. I lost a good amount of money through that time. But my investors...
So you took care of your investors. It's really impressive, Alan. It's really impressive.
We took care of them. Well, what are you most grateful for, Ken?
I am most grateful for, now 25 years later, I have the ability to give back to people and help them figure out this business. 25 years ago was rough. No, there was none of this stuff. Your show wasn't around then. And there was it was very hard to learn this business. And I am super thrilled and that I'm able to give back, because every single person that I feel like I'm able to help, it changed my life. It probably changed your life. And if I can help change another person's life, that really is impactful for me. I love that.
And 3 good things that you've experienced in the last 24 hours.
Yeah, 3 good things. Well, first of all, I got up this morning feeling fantastic. So that's certainly one. 2, let's see. We are, our entire firm, we're continuing to move our firm forward, and to see the enthusiasm that our team has to reaching our goals collectively as a firm, and what we do for our investors and our residents. That is huge. And I would say the third thing in the last 24 hours is, I was on a webinar last night, and really got to help some people understand a few things about underwriting. And I love that, because now they're just that much closer to making it happen for themselves.
And how are you putting your success as an investor and entrepreneur to work to create universal well-being? Yeah,
so just what I said. I mean, I'm doing everything I can to help people change their lives. I'm a pretty firm believer. The concept, it sounds very simple, but you give a man a fish, he eats for today. You teach him how to fish, he eats forever, right? And so I take that and I put a lot of time and energy into helping people understand this. You do not have to be a rocket scientist to get into this business. You have to have persistence. It's a lot of hard work and a long-term plan. But if I can help people understand what they need to do to get there, that's just massively important to me. So I spend an enormous amount of time trying to do that.
And imagine you've come to the end of your life and you lay on your deathbed. What do you look back on as your greatest joy and sense of fulfillment?
Yeah, my hope is that as I lay on my deathbed and look back, that my family, my kids, my wife, they are able to say, you know what, I'm proud of what my dad did. I'm proud of what he stood for. And, I want to model at least part of my life over the way he's conducted his. So that's what I would say to you.
Well, Ken, it's been a pleasure having you. Thanks for being on the show today.
My pleasure. Thanks for having me, Alan.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.